What is going on? Welcome back to Financial Journey. So today we're going to talk to you on SoFi. I want to go over some of the current data points, what shorts have been doing, and go over everything else you need to know. But first, make sure to hit that thumbs up and subscribe. Always greatly appreciate that. And with that said, let's get right to it. So currently it is down 1.55%. A lot of volatility, as you can kind of tell. So 783 the low, 810 is the high. Both make sense when it comes down to the technicals, so I'll break that down in a second. But 13.03 million shares have been traded within the first 2 hours of the trading day. 41.2 million is the average. And the code word for today is CPI, or I guess inflation, whatever you want to call it. But those numbers did come out, and that is spooking the broader market. So on a year over year, it did come in line with the expectations of 3.1, and the month over month was a little bit higher based on the forecast, which was 0, and it came in at 0.1. If you're looking at the true data, it does show that the energy basket did go down about 2.3%, meaning the other basket items did go up quite considerably. So once again, this is the negative of CPI, is just the heavy weightedness of energy. This is why the Feds like to use PCE rather than CPI, but mainstream media and whatever else likes to use CPI. But in reality, this isn't necessarily the best data. So this is what is prompting a little bit more of a sell-off today. There has been no news, no SEC filings coming out from SoFi exactly. It would be really nice to see if Anthony Noto does buy in the 7s, but obviously there's only so much you can ask for when it comes down to that. But as of late, the only thing that people have been really bringing up for SoFi is shorts. Oddly enough. So shorts have been really increasing the position ever since it looks like beginning of October, the short interest was around 12.34%. And now it is just nearing 16%. And this is the historic kind of viewpoint for SoFi and shorts. So it looks like in May 2022, the short interest was around 20.34%. So that's kind of the peak. It does look like, despite the new SEC rule coming into play mid-December to late December, like shorts are still getting into SoFi. Not today, but over the grand scheme of things. So today shorts are returning around 214.4 thousand shares. 15.57% of the free float is being shorted. So that is very, very high. So over the last couple of weeks, fintechs have just been massively slaughtered. And once again, like SoFi is getting dragged down and grouped with a lot of unproductive companies. Obviously you can take that figuratively or whatever else, but SoFi has hit home run after home run when it comes to their earnings. And a lot of articles are saying that exact same thing, that SoFi has huge amount of potential, and even just pointing this out. So data-driven investing is bringing up about how shorts are really getting in, and that he hopes that they do continue so up until their upcoming earnings, which will show profitability, so the Q4 earnings. Because if that is the case, then shorts might be in for a little bit more of a surprise. I think shorts are hedging that the broader market is just going to continue to sell off, and stocks such as SoFi are just going to magnify and get dragged down so much more. But keep in mind, I'm not a financial advisor. You guys always do your own due diligence. Just breaking this down a little bit further. So 139.37 million shares overall are being shorted. Cost to borrow average is 0.87%. And so, as I've said in the past, I'm not saying that SoFi is a short squeeze play. It's just good to use this as a benchmark. Through the Interactive Broker, short availability does indicate that there is more than 10 million shares available to be shorted. So if shorts really were doubtful on SoFi, they could double, triple, quadruple down based on this. And it's very cheap for them to borrow as well. Like I said, with the cost of borrow being so cheap. So once again, that's kind of a positive, but still, it's something to kind of monitor. And just how I interpret today exactly by shorts returning on a red day shows that they feel it's unjustified. But once again, we just have to sit tight and wait. When it comes down to options activity within the first, like I said, 2 hours so far, the market being open, $2.03 million in calls being purchased versus 2.11 million in puts. So based on this information, it is kind of evenly divided, but if you compare it to the last several days where there has been a huge, immense amount of call options being purchased, today is a little bit more bearish. So once again, that's something just to kind of consider. Of the call options that are being purchased, this shows all the strike prices, expiry dates. Based on this, it is anticipated for it to close above $8.50 by the end of this week. And looking at puts, it is anticipated to be sub 750. Like I mentioned at the very beginning, both make sense when it comes down to the technicals. And plus, there's a hell of a lot of other data points coming out this week that definitely could cause a lot of volatility. So CPI was today's, I guess, dagger, if you want to call it that. Wednesday is PPI as well as the Fed decision rate. So whatever does come out afterwards, I don't anticipate them raising or kind of cutting rates, but I do feel like they might be a little bit more hawkish, which might spook the broader market. And then obviously on Thursday, there's retail sales. So there's a lot more data points that could cause a lot of volatility. And clearly people are betting with options through that. These are some of the transactions that have occurred on the secondary market, over $100,000 today. So far only one big transaction of 1.41 million. So obviously based on the volume, it's just a lot of algorithmic trading today. So that's kind of where it's at. But when it comes to the technicals, with it at $7.94, it is between this S1 and the pivot. So 777 is going to be that next strong support, and 808 is going to be that next strong resistance, which it kind of did bounce off of for the high today. So most likely it is just going to trade within this range up until tomorrow, when a lot more data points. And I think no matter what, there's going to be a hell of a lot of volatility in the short term, as I've said. And looking at some of the fib levels, it is fairly wide. So you just have to be comfortable with a lot of volatility. But I feel like the broader market is pointing that a lot of stocks are going to continue to trend down, even to the point of around the S2. So in SoFi's case, 758 might be at least this week's low. I was very optimistic about this week starting off with CPI, but CPI clearly, as I mentioned, is not good by any means. So when it comes down to the Feds talking on inflation, they might not necessarily be happy. And looking at some data points at the momentum indicator shows number of retail investors are getting out. Stochastic is also at 79. There is no defined trend, but 79 is considered quite overbought. So I think today and plus the rest of the week, that'll play a part in it as well. So it might potentially pull back. So something to consider. Let me know your thoughts on SoFi in the comments below. Don't forget to hit that thumbs up and subscribe. Always greatly appreciate that. And give yourself a shout out. Have you been buying? Have you been selling? What have you been doing with SoFi? And one final thing, if you do like my channel and support the growth, take a look at my memberships, link in the description below and also the comments. With all that said, I appreciate all of you watching.